G'day everyone, welcome back to Pete's Investing. June the 3rd, 2023, the Aussie-US currency update. On our weekly, we're still in a bearish momentum primarily, but on the daily, we've broken up into a neutral positioning with these last couple of bull candles. So let's look at each of these in detail. On the triple moving average of the price chart, still in decline. Likewise, the CCI 150 moving averages, and they align, so giving us this bearish signal. So on the daily, because of this upswing in both the price chart and the CCI moving averages, it's pulled into a more neutral positioning. So possibly could reverse, but at the same time it could reverse back down to the downside. I did have this minor resistance here at that point there that was forming previously, and since our last video I'm going to remove that and move this solid resistance support down to that level at 64.58, and our resistance is still at 71.57, so I'm going to leave that there. So if it keeps going up, it may well come and bounce along this ascending trend line. So I'll keep, again, I like keeping those in there. Can get a bit messy on the chart, but I like keeping these major diagonals as well as horizontals in there to get a better view of where it may land. On the hourly, again, you can see there more closely the bounce off that key support, which we just confirmed. Now, of course, these are fluid support resistance levels, so they can always change. But at the moment, this is where it's landed and where it's bounced off from, and where it's going up to. Let's just draw a Fibonacci extension. You can see there it's basically hit just on the 50% retracement level of that wider range. So if we zoom in and get more, and if this continues to the downside, let's draw a Fibonacci between that low and that high. Look, the key area to look out for any further downside, for a medium to longer term downside, will be a breach of this 61% level. So I'm going to leave that in. It's not necessarily a target, it just means something we need to be aware of as a key area of potential reversal back down to the downside. So anything above this, it could always bounce to the upside from here. But at the moment, we'll just leave it there at the moment to see where it is. If I zoom out as well, was running this back test during this time period for the whole, on this hourly chart. This is a profitability chart. You can see here, while the price was going up, there were single contracts entered, and as the price was declining, it added more contracts to the position, which had an effect on our drawdown, on our profitability. So to avoid that drawdown on profitability, you always trade in the direction of the weekly and the daily. That's why I'm showing you these weekly and daily timelines. So you can see there back to April 22. Going back to April 22, you can see there are a couple of long positions during the daily, and April 22, from that point on, you can see there were no long positions up until that point. There was a long position. So during that period, primarily short positions. So you would have gone primarily short during those positions where the weekly and the daily were aligned. So to understand this and other trading strategies, refer to the links in the description below. Subscribe to my Patreon page, where we also answer subscriber questions. We also scan for weekly stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.